Good morning. Today is October 7th, 2025, and I'm not going to be going through the same route, like the same stuff as I usually talk to. I'm going to do a little bit more deeper dive on certain aspects of it. Let's go and let's get the day started. So first of all, the TSX on Monday ended by zero point 0.2 higher, which is negligible. But however, I did see energy, materials, and utilities, tech, and financials were all in the green, and the losers were industrials, communication services, healthcare, consumer discretionary, real estate, and consumer staples were in the red. And also, the most important thing is gold surged up to by 1.7%, almost nearing $4,000 an ounce, US ounce, which is a record high. And also the crude oil as well went up by 1.3%. This usually means that the investors are not in confidence in the market. So historically speaking, the best asset to have is gold, and it's been done 1,000 years ago, 100 years ago, and it's still effective today. So anytime gold goes up, that means the confidence in the market is a lot less. And also, Ottawa is shifting the fall budgets, and it's going to go forward. And Trump is floating a 25% tariff on heavy trucks ahead of Carney's meeting. So Carney was in Washington yesterday, or today. I have to check the news exactly, but this is before the meeting. And also, the other thing is, if you ever get your coffee at Tim Hortons, there's going to be a menu-wide price hike. And I've been not going to Tim Hortons for the last year or so, but then for people who do, it will affect your bottom line as well. Just because I get better coffee at McDonald's or Starbucks or your local coffee shop. And also, I usually don't do a trade market watch. That's more of a real estate thing. But today I just want to go over it because a couple of my realtor friends did ask me. So sales did come down year over year by 5,155. Average sale price did go up by 5%. New listings were down as well by 4%. And active listings came down as well. But the most important thing is the listing days on the market was around 42. And the average listing days should be about 24 for a balanced market, which is almost double. And in the 416, the detached homes were around $1 million, and in the 905s, 1.36 million. So, which means the 905s homes are a little bit more skewed towards a higher side. Semis, again, 894,000 in the 416 and 1.25 in the 905s. So overall, what we see is most people do not want to live in the 416 anymore, and that's probably because of the land transfer fees that do come across when we have to purchase a home, which is almost double comparing to the 905s. So, this is showing somewhat of a balanced market right now. Even though prices have gone up by 5%, this is directly in cause because of the interest rates coming down. But this is a good thing for realtors and obviously mortgage brokers alike, that this is happening and we are having a strength in the real estate economy once again. And in other news as well, I want to talk about the foreign control in the Canadian economy. This is old data, which is 2023, but it's still unique. And I was like, So let's get the ball rolling. So total corporate assets hit around $17.9 trillion in Canada. But here's the thing, Canadian controlled 15.3, which is about 85.6%. And foreign controlled was only about 2.6 trillion, which is around 14.4%. Overall, Canadians still control the majority of it. Also, the people who own the 2.6 trillion, US owns 53%, UK 11%, Japan 8%, and the concentrations were in wholesale 49%, manufacturing 44%, oil and gas 33%, mining was 32%, and non-depository credit, which is finances, around 44%. So overall, it's very nice to see the Canadians still control everything. US controlled manufacturing assets did grow from 237 billion to 333 in the past decade. And it's something that we do see that US dominance is still remain a high priority for the US market, but also we have to be understanding of that in the Canadian, even though they only control a sliver of the whole pie. But it's something that we cannot really comprehend how this is done. It's a lot more complicated than what I'm privy to, but overall, there's money coming into the economy of Canada from the US, so we do have to respect that. And also construction information. So this is the basic indicator for before shovels into the ground. So in Q2 of 2025, residential investment went up by 7%, non-residential went up by 6.7%. So pretty much because of the rates easing in 2024 and 2025 early, this is a good indicator that construction projects are coming to start once again. Because when the project needs to start, the first thing is surveying is the first thing that needs to happen on the land or the lot. So when these numbers are going up, that means in a due course time, after city permits and everything is done, construction projects will begin. So I personally feel because of the lower rates and also the appetite of the general government as well for newer residential units and commercial builds, I think this is going to be a good time for 2026 that we will have a lot more construction projects and real estate will be a little bit more busy. However, on that note, because of the listings days on the market is 42 and new surplus of properties may be coming in when they're building, I think it will be causing a best case scenario, which is a balanced market. But then again, I am not a fortune teller. I'm just interpreting the numbers that I see in front of me. But I hope I'm right to have a balanced market, not have a surging market or a low market. But until we see it, hang tight and enjoy your Tuesday. And I'll see you guys tomorrow.